Lakshmi with us now. They've posted a very good set of Q4 numbers. Margins have expanded, in fact, coming in higher than street expectations at 18.4% versus a CNBC-TV18 poll of 13.1%. Lower finance cost and debt repayment also aiding the market sentiment. Shailendra Chouksey, the whole-time director of JK Lakshmi Cement, is with us right now. First, if you could help us understand what was the reason for the lower expenses on a year-on-year basis, because that's aided your margins, and what would be the margin outlook from here on, sir?
Well, whole of last year we experienced very strong headwinds of rising cost of coal and power. That is because of the international prices of coal and petcoke moving up. So we had done, a lot of remixing of our fuel. Finally, in the fourth quarter, we could do much better than even the third quarter, though the prices of the coal had gone up. But we managed better efficiencies, smart procurement, and I think that is where it helped us to contain our cost of production. We were, in fact, lower than what we could achieve in the third quarter. So overall, of course, there has been an increase in our cost. The variable cost went up by about 15%, but thanks to our ability to lower down our fixed costs, we could contain the cost with an increase of about 9% on a year-on-year and about 7% on the quarter-on-quarter. So I think that has been one of the main reasons. We could also notch up better volume by about 8% in Q4, resulting in, and with some help in the improved realization, we could achieve 13% growth in our turnover in the quarter-on-quarter and 15% in the year as a whole.
Morning, Mr. Chouksey. How much higher are prices now if we were to compare it with the same quarter last year? And for your own cost increases, how much of it have you been able to pass on?
Well, very honestly, we have not been able to pass on much of our cost increases in the previous quarter, though we would see some traction in this quarter when we could increase the prices to some extent. But the quarter is yet to end, so we really don't know whether we will be able to sustain this increase, because some of the markets have seen prices going down again. But in the north, we have been comparatively better off. And secondly, it must depend on how the demand pans out. We have seen some slowing down of the demand because of the extreme high temperatures being experienced in the north. But I believe that would be a temporary phenomenon for about 15 days. And we also suffered in Gujarat, where there was an aggregate shortage issue because of some strike, which has been resolved. So I think some issues on the demand, but we are very hopeful that in the fourth quarter, in the first quarter of this year, we would see improved demand and also improved realization.
So, Mr. Chouksey, you said that you will consider a price hike because you've not been able to pass on the entire cost burden. By how much do you have to increase prices from here on so that you've been able to pass on the entire burden? You achieve cost parity.
We would need to at least increase our prices about 20 rupees a bag.
Okay.
Besides the fuel price, seen a steep jump in the freight costs because of the continuous rise in the diesel prices. Okay. So we need to compensate for both, and that works out to roughly another 20 rupees a bag on the current prices.
So 20 rupees per bag. And you also said that demand has been hit to some extent due to the soaring high temperatures, the heat waves. Could you quantify that?
Well, normally April we see a bit of a dull. So, April on April, there has been some minus, but then, the previous April and May are not really very apt months to compare, because we had that COVID-2 wave 2 impact in these 2 months. But if I compare with the previous quarter, yes, definitely there has been a slowing down by almost 10 to 12% and the demand in the north.
Mr. Chouksey, in terms of EBITDA per ton, what is your estimation for, or what is your target for FY23?
The EBITDA would depend to a large extent on our ability to meet these price hikes. But if we are able to do that, assuming that, then I would certainly expect that it should, and that is what we hope for and targeting for a 4-digit number in our EBITDA on a company as a whole.
What is the number, sir? Could you repeat?
I said it should be in 4-digit in terms of rupees per ton, depending on our ability to pass on these cost increase.
Okay, so hoping for at least 1,000 rupees per ton in terms of EBITDA per ton. One final question,
Correct.
sir. Could you give us a volume growth estimate for Q1 and for the full year?
As I mentioned, Q1 is slightly misplaced because
Right.
the last year Q1 was affected. But year as a whole, we would certainly expect further 7 to 8% growth in our demand in our volumes. Though we have very limited headroom now to increase the volume, but we are trying to do that. Year going forward, when our Udaipur, the new kiln gets lighted up, and we are expecting that to get lighted up in October 22 and the grinding coming in by March 23. So I think in the next financial year, that is 23-24, we would see a good traction. But right now, based on whatever capacities we have, we'll have to optimize to the maximum and get about 7-8% growth.
Thank you, Mr. Chouksey, for joining in. That is JK Lakshmi Cement. Get into a break. On the other side, the management of Imami will join in. Stay tuned.